Hello and welcome back. Before we get too far into the video, I want to highlight something on the screen that is a rarity to see so clearly. I've talked about negative swap fees or negative carry or negative finance rates quite frequently on this channel, but I want to actually show exactly what that looks like in real time. As we look at my live account, we can see at the very bottom one of my trades cost me 11 cents for 1 unit as I simply took a reduction from the bottom of my position sizes. But the finance rate for the day gave me that 11 cents back. Negative swap fees are not a guarantee. Market interest rates can change at any time and faster than the wind. But when they're there, why not take advantage of them? They are a unique blessing that can really help in terms of your strategies. It's worth taking advantage of something that is simply given. But that's the point of what I've tried to make available with this information. The fact of these simple tool being taken advantage of when the opportunity allows it. Anyway, on to looking at next week, the week of June 21st. As we look at last week from looking at the chart, and we look at next week's possibilities, the order book has yet again shown clear and decisive footprint that we can follow. I've scaled the chart a little bit so that we can see the order book clearly, and we are on the monthly time frame. The point that really stands out is we see where we are at right now with the current price, and we see where the order book is at. We can see a huge push above the current price line, something we didn't see last week as prices dropped down over the week as expected. But this week we definitely see a very clear pattern. We still see a little bit of downward push, as I've marked on the screen, where the selling looks to be more opportunistic, but still within the range that I've marked between the green line and the upper yellow line, the current resistance level, if you will. So from the standpoint of what we're looking at, I think next week's prices might uptick. We clearly see the upper range above the price action on the buy side. We see interest of where the market wants to go, its participants. But we also see a much more significant and actually much steeper climb on the sell side. Compared to previous weeks, when we look at just the order book alone, the upper level resistance, the yellow line, clearly has more activity closer to it now than it has in at least the last month or more. And you could even argue that that might actually go back to early 2026 with this candle right here hitting the top of the upper boundary. So we could actually see within the next week a push towards this direction. And as we can see from previous history, it is not unrealistic to think that a single candle can in fact cover all of that distance. The market, from the order book standpoint, clearly shows the interest. But of course, once Monday starts and we actually see the opening values, that's when things are going to begin to heat up even more within the market dynamics. So let's go to the weekly chart and look at its order book and see if it also has that pattern. Okay, I've scaled out the chart on the weekly time frame, and we can clearly see the order book, even on the weekly, has buy pressure and sell pressure between the current resistance line, yellow line, and a current support line, the green line. So we clearly see active interest that shows that the market may very well push upwards in a very strong movement. Now we do see a little bit of the lower activity, which might be institutions trying to grab liquidity before this upper boundary push. But either way, I think we're going to see Euro USD and quite possibly a large footprint within other markets trending upwards next week, which means more accumulations. So now let's move to the daily chart. Okay, the daily chart is compressed as I can get it, and the candles are in the way, but you still clearly see the order book in the background. We still clearly see the lower part below the green line where there is some activity on the daily chart, where there might be large purchases looking to get lower lows from within this support radius. But we see quite clearly from the price action, we still have that upward trend in both the buying and the selling. So we still have a lot of interest. And on the daily time frame, the selling seems to represent significantly more pressure than any of the other higher time frames. So from that perspective, we clearly see a very clear and well-defined pattern suggested for next week. Now, that doesn't mean that by Thursday the market might not become exhausted and end up turning downward. But we have a reasonable level of confluence within the order books to suggest a clear approach to the market. Zooming into the daily chart, I want to highlight something on a chart that is quite interesting and useful when you're looking for patterns and situations. And that is the peak and valley combination. Right here we have the peak. That is, if you look at these three candle patterns, the red candle and then the two greens, you see that we have a close, a higher close, and then a lower close, creating an inverted V shape or a mountain peak. These are often quite indicative of possible market directional changes. They're not absolute by any means, and there's always room for fake outs and whatever else that can go on within the market. But they're good enough that you could easily get a reasonable level of profit by adding this type of technique to your trading system. So whatever algorithms you are using, or even if you're just using price action, looking for a peak or a valley, which down here would be a valley, is a good way of being able to trap and siphon the market. It's a reasonable approach that does allow for constant profitability. It does require risk management, of course, like any approach, but use the techniques that the market gives you. We can clearly see the pattern, and even in looking at the order book close range, we have the boundary price, and then we have the upper order book. While we see action in the lower part of both the buy and the sell, most of the action is above the current price. So really looking at what we see on the chart, this is more confluence or more confirmation of a statistically high probability of the market going upwards. So plan accordingly for next week. Expect a market spike that may or may not last the entire week, but at the very minimum, you will have at least one or two accumulations for this kind of a market structure. Share your thoughts and tell me how your week went last week. Were you trading with the market, or were you trading counter to the market? Both are profitable. but it's a matter of knowing which way you go personally to what feels best for your risk assessment. Thank you for watching.